Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. Following Moody's downgrade of the US credit rating from AAA to AA1 on Friday, yesterday saw downgrades of major US banks as well, Bank of America, JP Morgan and Wells Fargo from AA1 to AA2. Treasury Secretary Bissett rightly called the agency a lagging indicator, and markets barely reacted to the move. The S&P 500 rose 0.09%. 10-year US Treasury yields held at 4.45%, same as May 13, and the US dollar index dropped by 0.36%, a move that is difficult to describe as a reaction and aligns with the prevailing medium-term trend. We do not doubt that events are accumulating, ultimately leading to a major market collapse and economic crisis, though not in the short term. On the daily chart, resistance at 1.1266 was pierced by the upper shadow. Tuesday began with a rise, but the Monday gap remains unclosed. If the price consolidates above 1.1266 and then continues higher to surpass 1.1535, a bearish divergence with the Marlin oscillator will form, which could lead to a sharp return to below 1.0955. Not only closing the gap, but also crushing the hopes of euro optimisms. On the 4-hour chart, the price is attempting to climb above the indicator lines, above red line, the balance indicator line, and the MACD line, it's a blue line on the graphic, signaling an intention to break through 1266. The Marlin oscillator is also rising. But unless the price consolidates above the 1.1266, a sharp drop toward 1.1150 remains possible, potentially clearing the way for more stable growth, which does not rule out a crush later. The gap is small, and it is either non-existent or already closed on other currencies. Therefore, the main criterion is whether the price consolidates above the 1.1266 resistance level. And we're starting with pound sterling dollar pair with Tin Leo. On the hourly chart, the GBPUSD pair on Monday reversed in favor of the British pound and consolidated above the resistance level zone of 1.3344, 3357, which had previously posed serious difficulties for the bulls. Thus, the upward move may continue toward the 1.3425 level. A consolidation below 3344, 3357 zone would favor the US dollar, and a slight decline toward the 100 Fibonacci level, 1.3205. The wave situation became more complicated after the latest bull offensive. The most recent completed upward wave broke above the previous wave's high, while the most recent completed downward wave failed to break the previous low. Thus, the bearish trend is beginning to shift into a bullish one. It will be difficult for the bulls to rise above the 1.3425 level without new statements from Donald Trump about raising or introducing tariffs or imports. However, the bears are also struggling, as recent days and weeks have shown. On the 4-hour chart, the pair bounced from 100 Fibonacci level at 1.3435, but the decline halted near the 76% retracement level at 1.3118. At the moment, the pair has almost returned to the 34.35. A new rebound from this level would again favor the US dollar, and some decline toward 31.18. If the pair consolidates above 34.35, it could indicate further growth toward the next Fibonacci level at 127%, 1.3794. No emerging divergences are observed today on any indicators. That's all for today. Wish you best of luck.